guys, welcome back to our channel. If today is your first time here, welcome. Please kindly click on the subscription button down below your screen to get notified of all our posts on this channel. Yo fam, in today's video I'll be showing you how you can easily use two simple price action chart pattern to identify when a trend changes or when a trend is about to change its direction without using any price action indicator. Okay, a lot of traders find it very difficult to recognize this, especially trend traders. Some of us that trade some of you that trade against the trend or that trades other systems in the forex market. You trade and you keep on hitting your stop losses, and you get to wonder why you keep on hitting your stop losses. So this is one of the reasons, and this is one of the reasons that you need to watch this video from the beginning to the end. Yes, you keep trading against your this thing because you do not know when a trend is in place and when a trend is about to reverse or when a trend has reversed. All right guys, so this is what will give you that simple trick, and this video will show you that little secret. You will learn a lot from it, and you'll be able to know how you can trade efficiently when you are in trend and when a trend reverses. But before I reveal this little secret to you, I want to remind you about what a trend actually means. I know for those of us that have actually been in the market for a long time, you must have been taught and you know already when a trend is in place. But for those of us that are yet to know it, I will advise that you make research or you register on our platform to get or to be educated about all those things in the market. All right guys, so I said here that trend means, and trend is a direction of price movement, okay, which could be bullish, and trend can at times be bearish. But at times those bearish and bullish movements create series of higher highs and higher lows, and sometimes those movements create series of higher highs and higher lows in the market. So when this series of higher highs and series of higher lows creates, you know that at that particular time the market is in a range. That is, we can actually say that the market is in equilibrium, where the buyers and the sellers are in disagreement, looking for who to take charge of the price movement as of that particular time. All right, so the formation of this range in a very simple form or in very different structures can actually create what I call a chart pattern. So when you see this price movement forming and giving you different structures in the market, you must be able to recognize it and be able to know that these structures form chart patterns, in which a lot of traders uses it to as a trading setup. Some use it as a tool, some use it as a confluence, and to apply to their respective trading setup. But in this video, I'm going to show you how you can use some basic chart pattern to know when a trend is about to reverse. All right, so the formation of these different price movement structures simply result to a chart pattern, which you use as a basic market tool or confluences to trade. But in this video, we will be using trend continuation chart pattern, which is the first thing. We are going to be using range, and we are going to be using break of market structure. Reason because it is not every time that a break of structure will get valid or a change of trend, right? So it is not all the time. Price will at times break structure, but that doesn't mean that the trend has reversed. So that's why we made this video, to show you that it's possible for, if the break of structure doesn't work for you, right, you are unable to recognize it in the market, so you can easily use the various chart patterns I'll be using in order to recognize when your trend is about to turn or to reverse. All right, so at times price breaks structure and it fell. So the combination of range and that flag, the flag could be any trend continuation chart pattern, right? So it will actually let you know that the market at that point is about to reverse. So in this video, I'm going to explain every psychology behind this movement for you to understand. So at times price breaks structures and fell. So the combination of range and flag, and the flag could be some trend continuation or reversal chart patterns, will be able to show you that your trend is about to reverse. And in this video, I'll be showing you the psychology behind this trend reversal or continuation chart patterns, and the range itself, the psychologies behind it, so that you'll be able to use it as a bias to know when your trend is about to reverse. In the case of you that doesn't know how to, or doesn't understand, if you do not understand what trend this thing chart pattern actually means, as for those of you are the people that are just starting to learn forex at the moment, so I would advise you that you make research or you register on our platform. We will teach our students from basic to advanced and to master level on how to trade the forex markets profitably. All right, so this guideline will help you perfectly. All right, so what we are going to be looking out for in this video is that we are going to be looking at the following things to be able to use to know when the trend is about to reverse. The first thing, knowing fully well that you must always be working with your trend. So I could actually say that that's the first thing, but after that, the first major thing should be your trend continuation chart pattern. So you must be able to identify it, right? So the second that will come will be a range, and the third one that you will use is what? A break of structure. So as we proceed, I will begin to explain the psychology behind these formations. All right, so let's talking about the steps. These are the things that you need to follow up. The first one is to identify a trend continuation chart pattern. The second is to highlight a range which is always close, and it must be very close to the trend continuation chart pattern. I'm actually using a flag because most times what I use is flag. I see flag depending on the setup I'm using. So in your own case, you may actually see some different chart pattern continuations, right? So whatever that you see in the market, you use it, and that's why you have to be very familiar with a whole lot of trend continuation chart patterns, right? So the first step here is just to identify your trend continuation chart pattern. The second one is a range, and the last thing to use is your market structure. So you have to make sure that there is break of structures that gives you the identifications that something is about to happen. So however, these three things will be considered as a bias to using this method to identify trend reversal. So without wasting much of our time, guys, so let's go into our live chat. So I'll be showing you this one after the other and explaining to you the psychology behind it. Let's go, guys. All right, welcome to Euro JPY chat. Sorry guys, I'm gonna be a little bit fast here, just to not to get you bored, and to also make this video a very short one, and the explanation and everything. So what we're gonna consider first, like I said in our previous slides, that the first thing that you should consider, regardless of any security or any pair or any assets that you are trading, that the first thing you should consider is a trend. You have to ensure that there is an inception of trend, and you are in trend, even if you're a trend trader, or even if you're not a trend trader, you want to use this trick to know when a trend is about to reverse, right? Or when a trend has reversed. Those two things, take note. So you first of all consider what a trend. So you ensure that market is actually in a trend, right? So looking at this chart, the previous trend was a bullish trend. This was a bullish trend, which is the previous trend, which is this. So this is a bullish trend. How do we know that this is a bullish trend? A trend can be bullish when it creates series of higher highs and higher lows, right? Breaking structures, just like what we have here in this case. We have a higher low, a higher high, a higher low, higher high, which break above that structure. So come down below, give a little trick of going down, but actually reversed upward, right? To break the previous higher high, to create a higher high, drop down below, and continue, so forth and so good, right? So that is how to know that when, and how to know when a market is actually on trend. So the second thing that you need to consider when using this trick is, I said previously that you need to consider a trend reversal or continuation chart patterns. Like there are so many of them, there are a lot of them in the market. If you are just new to the forex market, I will advise that you make research or you register on courses. We MTI, we have courses that we take our students from basic to advanced to master's level. If you want to learn the forex market, we'll teach you all this so you get to understand them. So you get to understand, I will advise that you browse about them because you see various of them in the market. But in this case, the chart pattern here that formed was a bullish flag. Remember, the trend was actually bullish, and what formed here was a bullish flag. The meaning of this bullish flag, when you see a bullish flag, it actually shows you that it is a corrective move. It is a pullback that shows that the dominant trend just gave a pullback to gather or pump in more positions to push forward the trend, right? So in this case, the dominant trend was bearish, which is the bias, right? So at this point, when it got to the higher high, they dropped to pump in more positions to move ahead, right? So that was what we see. So, and that is what you need to consider for secondly. So thirdly, you watch out for a range, right? Looking at this, okay, I'm actually using a chart that has already happened before. You can use this on any chart. Maybe one of these 2 days I will make a video on a live chart, so we do this together. All right, so in this case that we had a range, right? So what's actually happened here is that price moved in and dropped within that range, okay, drop down and created an equal high, drop inside the range, right? We call this a control price, but I don't want to go into this. But if you wish to get to know this, like I said, check on the description link below. You join our classes there. All right, so it came up to form an equal high and drop below, just form a consolidation. So this part here is actually called a range. Okay, so this is called a range. A range is that level, that time, or that period where the buyers and the sellers, right, they agree, or they tend to disagree their positions or their tendencies to control the market. So when you see a range, it signifies that buyers are beginning to take off at this point here. It's when price got to this level after the break out of this chart pattern. So it signifies that buyers began to take off their positions, and then at this point that sellers were preparing to open their positions. Where you saw sellers, we actually see that sellers opened their positions, which made this big push there, right? So but that wasn't a sign that the trend has reversed, right? When it got to this point, it wasn't a sign. Not until we begin to see all these equal highs and equal lows in this range. So that was where we were able to know that price is actually ranging at that moment, right? So that equal highs and equal lows will show you this, to tell you this, that the market is oscillating. But this is where the important stuff is, and where the holy grail lies on using this trick. So when you see break of structure will actually show you, which is the fourth thing. Break of structure will actually show you that the market is about to reverse, or the market has reversed at this point. Now, considering this was an equal high, we cannot use this. Price dropped down inside the range, right? Broke this higher low, okay? Broke the higher low and dropped, formed a higher low and pushed up, right? Pushed up, and it closed below the equal low. It could not go further. So that was actually a sign for we to know that there's something wrong and there's something about to happen, right? So it's just for we to keep calm and see and watch what the market will do. Like we used to say, patience is a virtue, right? So you keep on having that patience to see what the markets will tell you. So price actually dropped down, closed below the higher low, right, and break that structure. Now this was a minor low inside the range, so you do not consider this as a break of as a criteria that this trend has reversed from bullish to bearish. This will not give you a pure sign, right? Because price can actually break, like I told you, that price can break a structure and still fail, right, and come down and continue the consolidating, right? But in this case, you need to see price break the major or nearby higher low firstly before you conclude that new trend is in place, right? So in this case, we had a higher low, which was here, which I target a 4-hour break of structure. So you see price came down, broke this structure, and gave us a sign that sellers have already taken positions, but we cannot conclude, right? So and that doesn't mean that a break of previous higher low or whichever lower high or lower low, it doesn't determine an upcoming scenario, right? Until you see a fail to break above lower recent lower high or lower low, depending on the trend you are trading, just like what you had here. So when price came down, it gave us a sign that sellers are already in place, so price pushed up, right? But this is what I'm trying to explain. So price, as it came up here, it closed below the lower high, which was the previous high, lower high, to form a lower high, another lower high. So this is a sign that price fell to break this point. So assuming price broke this point, this bearishness, this break of structure here will not be valid. But hence that when price came down here, it closed below this structure. This already gave us a sign that the buyers do not have control over this market again, right? I hope you can see that trick. So that was when price dropped down, and the another confirmation was as price dropped down, this became a lower low, and when price came down here, it broke that lower low to form a new lower low before a little push to form a lower high, right, to where price is currently. So this is just a trick, the fourth trick for you to know. But how can you use this last one? There are some times that you have this last one, but you cannot just know this when you are trading. When you are seeing all these things forming, right, you won't be able to know this, all this especially the last points, break of structures, like it will be kind of confusing. But what will give you the assurance that something is about to, your trend is about to reverse, is the formation of the flag. It might be a flag, it might be a wedge or whatever. It's the formation of the chart pattern and the range. And like I told you, the chart pattern should always be very close to the range. If you see it afar, hardly you see it far from each other, because it's always close. So this is just a little trick that you use to know when your trend is about to reverse. So like I said, let me recap. The first thing you look out for is what? A trend. The second thing is a trend continuation chart pattern. And the third thing is a range. The last one is a break of structure. You cannot break. Remember that a break of structure doesn't mean that the trend has reversed until it breaks structure to close below or fail to break the previous high or low, depending on the trend. All right, so this is that simple trick and that holy grail, and what you need to use in knowing when a trend is about to reverse and when it has reversed. I hope you enjoyed this video. I hope you really gained something from it. If this is your first time, like I said, please kindly click on the subscribe button, and to be getting every update that will be dropping on this channel. Do well to practice this very well. Practice it, and while you are trading, also observe it in the market and get back to us. Do well to make a comment, so we'll get to know and to see that you are already following up on what we are dropping on this channel. Thank you very much. See you in my next video.